Welcome back. You are with us on Let's Talk Money. We have, a viewer joining in now, and I must say that it is this viewer's queries and very, very specific, nuanced queries that actually led us to thinking about doing a whole show on it, and that's what Let's Talk Money is all about. You ask, and we decide to do this on the show and then answer your questions. So, Mr. Roopchand, congratulations first of being so meticulous with your queries and questions. I know you have several housing issues at hand, so let's straight away get to it. What's your first question?
Our society is going for redevelopment, and I was just wanting to little bit confused, as because there are some payments etc involved by the builder, like they will give us rent, they will give us some allowances
Here.
etc, shifting allowance, brokerage, and also some corpus. I mean, are these taxable? I understand they are not taxable since they are termed as hardship allowance, but I'm not very sure. Suppose you don't spend the rent or something like that.
Okay, great question. Just hang in there. I'm going to straight away toss this to Mr. Roongta. Lots of people probably sailing in that same boat where houses either going in for redevelopment or has gone in for redevelopment. So what all are we entitled to getting in terms of from the developer, and then what's the tax treatment?
So if it is of any comfort to Mr. Roopchand, I am sailing in the same boat as
Oh,
what he
really?
is sailing into. Unfortunately for Mr. Roopchand, there is no hard answer.
Oh, okay.
This is hardship compensation, redevelopment is not specifically covered in the Income Tax Act. So you have to go by the normal capital gains tax provisions and what is considered capital, what is considered revenue. So far, the Income Tax Department's ability to tax ultimately all the recipients for the hardship compensation has not succeeded.
Okay.
All the decisions are basically tribunal decisions though, but all decisions are in favor of the recipients,
Okay,
the taxpayers.
So basically,
that it is not taxable.
It's not taxable.
Correct. That it is a capital allowance, it is capital, it is not income, and capital is normally not chargeable to tax, capital receipts. Some capital receipts, because of what is provided in the Income Tax Act, gets taxed, not hardship compensation. That has been the ratio of the tribunal decisions. I am going to hasten to add that please do not take this as a conclusive.
It's a matter of, I think, debate and litigation perhaps.
Absolutely.
So you need to be cautious.
It will invariably go through litigation.
Okay.
There is no certainty. The revenue refuses to agree, at least in the first instance. So most likely you will succeed, but you will have to
Could be an
litigate.
arduous fight if you want to sort of,
It will have to be a fight. I would not use the word arduous, but it will be a fight.
Fair enough. So that's the first part of Mr. Roopchand's query on, whether the receipts coming in from a property developer, whether they're taxable or not in the case of a redevelopment. Mr. Roopchand, now I know that I think you're also planning to buy a second house. So tell us what your question is with regard to that.
Because what happens, there's uncertainty of developers. Sometimes you hear stories that the building doesn't gets constructed for 10 years or something. Now suppose the builder stops rent after few years, then where are we? We are not anywhere. So we were think that instead of going for having a sword above our head, we should buy another house instead in the name of my son or my wife, or only my son. I'm not sure in whose name to buy the flat. That was the question. the Currently the flat which is going under redevelopment is in my name. I wanted to know whether my wife, who also doesn't have a house, my son also doesn't have a house, whether they should buy one in their joint names together, because we are going to sell. We have sold some shares, and there are some capital gains and all that are there. I understand in case they are invested in a house under section 54F, the full proceeds, if the amount, they qualify for some exemption. That means you don't have to pay capital gains on that.
Okay. Again, a set of questions in that one question. Should he buy that second house in wife and son? Should they buy it jointly? And what about using proceeds from sale of shares, let's say? I mean, how do you sort of plan for this?
I mean, these are overtly specific queries, which is very difficult to answer on a TV show. But let me give again principles. Okay. The principle is that subject to certain limits, if the capital gains that arise, assuming that the hardship compensation on redevelopment is treated as capital gains, let's assume that, okay, because nobody can prevent him from buying a house.
Correct.
Right.
Correct.
It's only, I think his queries are basically on tax.
Yeah.
Rather than on whether he should buy the second
Yeah,
house.
yeah,
So,
yeah.
obviously, if these hardship compensation is treated as capital gains, then he can buy a second property. Please remember, the old property is going to be exchanged with a new property.
Right.
I am presuming he is not selling the old
No,
property.
that's a redevelopment
That's
property
a
that he's holding on to.
So,
Yeah.
so under section 54, that is the primary exemption that he is claiming. Now, of course, it is allowed that you can invest in two properties, provided that the capital gains does not exceed 2 crores. So, I have no idea what the figures in the case of Mr. Roopchand is, but if that is true, okay, then maybe he can buy that second property in his name. He has to be one of the joint owners, and that contribution to that much extent must come from him. If the shares etc. that he is selling are in his name, and in the same property he wants to take that 54F exemption, he can.
Okay.
He can do that. There is no bar, okay, on the same new property being used to claim multiple exemptions, as long as the amounts add up.
Got it. Speaking of shares, I think that's another query. Mr. Roopchand, very quickly, we are running short on time now. But just tell us more about the taxation issues that you have with respect to selling shares and then using those proceeds to invest in your new house.
Financial year we have sold, and now actually the subsequent question is also that means can for two consecutive years capital gains proceeds be used for buying the house, or only 1 year is allowed, etc. That is also the subsequent questions actually. The last just concluded financial year, we have sold shares also.
Okay. So again, just to,
I mean,
I'm just going to broaden the scope of the question so that it's useful for everybody. Basically, I think we want to understand that if you've sold shares in FY24 and there are capital gains that are rising from it, can you offset that to buy a house in the next year or the year after?
No, I think his question is different. I am going to reframe it.
Okay.
What he is saying is that he will sell shares in FY24, he will sell shares in FY25, right? And say buy the property in FY25. Okay. Can he use the capital gains proceeds of 2 years?
Cumulate that, yeah.
And cumulate that and buy one property.
Yeah.
Okay. The answer to that is yes, but like everything else in tax, there is a qualified yes, right?
Okay.
Because subject to certain deadlines, if he has not made that investment within that deadline, then he has to have deposited that money in a capital gain account scheme. If he has done that, then claiming multiple exemptions, as I mentioned, for the same property is not a problem, provided you satisfy the other conditions that go with those exemptions.
So again, coming back to my general question, if in FY24 someone sold shares and there are capital gains, and then this individual wants to then sell more shares in FY25, he can put the proceeds in that capital gains account and accumulate everything and offset against the purchase of a house.
So simple. FY24 finished off in 31st March 24. Let us say he had a capital gains of, he sold shares of 50 lakhs and had capital gains of 20 lakhs.
Right.
Please remember, when he is claiming exemption of shares, the entire sales proceeds have to be invested, not just the capital gain portion.
Okay.
Next year, let us say he sells another 30 lakhs on which exemption is, on which capital gains is 10 lakhs, right? It's 80. And let's say that can happen any time in FY25. But if he buys the property in before July of 24, July 31, 24, which is the last date for filing returns, okay, then nothing he needs to do, he can just do it.
Okay.
But if the property purchase is delayed beyond July 31st, 2024, then the FY24 money he will have to invest in the capital gain account scheme, and then as and when he buys the property, okay, then he will have to withdraw and buy.
Okay.
So, the short answer to Mr. Roopchand is it's complicated.
Absolutely. We could go on doing, I think, a whole series of shows on this, but then there you have it, house property and taxation. can never be an easy subject. But thank you, Mr. Roongta, very much for simplifying it as much as it's possible on television. Well, with that, we have to, of course, wrap up this edition of Let's Talk Money. Thank you for sending us all of those questions. Keep sending the queries. We'll take them up next week. Thank you for watching.
Let's Talk Money